and thank you for joining us for this week's MacDesk Floor Report. I'm Rebecca Darst from the NYSE's Market Access Center, speaking to you directly from the trading floor at 11 Wall Street. Today is Thursday, December 20th, and we are up 20 points in the Dow, just about 3 points in the S&P on a heavy news day for markets, and not just for those of us here on the floor. We'll get to that announcement in a second. First, let's take a look at the action that brought us to this point. Stock index futures were a mixed bag this morning after Asia closed mostly lower. Japan was the outlier, with the Nikkei closing about 1% lower after the Bank of Japan expanded its asset purchase program and signaled that it will review inflation objectives. Remember, Japan's new Prime Minister Shinzo Abe was very aggressive in the run-up to the country's recent elections in demanding more stimulus measures and inflation targeting in the area of 2%. Today's action by the BOJ didn't bend to Abe's demands all at once, but observers by and large are looking for more monetary easing from Japan in the medium term. The European session was mostly a non-event news-wise, with only minor macroeconomic data releases on the docket. Germany's producer price index declined slightly less than consensus had expected for the month of November, while November retail sales numbers for Great Britain and Italy came up short of expectations. This brings us to the New York pre-market, where we had a slightly hotter than expected weekly initial jobless claims number. Initial claims came in at 361,000. Market was looking for around 345, while continuing claims also showed a modest rise. We also had a third read on third quarter GDP, which was a more upbeat measurement, 3.1% versus market consensus in the 2.6% range. Later in the morning, we had a much better than expected Philadelphia Fed manufacturing index for December. Philly Fed readings greater than zero indicate growth, negative numbers indicate contraction. We were coming off a real stinker for November with a read of minus 10.7 due to the impact of Hurricane Sandy, but today's December reading came in at a positive 8.1. Most analysts in our neck of the woods aren't expecting such buoyant numbers to hold, but the reading did lift the S&P from its intraday low very, very quickly. Since that time, we've traded mostly in a very tightly bound 3-point range for the S&P between 1435 and 1438, only once briefly ticking slightly below yesterday's closing level, even despite dueling press conferences on the fiscal cliff stalemate from House Majority Leader Eric Cantor and Senate Majority Leader Harry Reid. Remember, we are trading in front of a quadruple witching options expiration tomorrow, which often brings with it the potential for heavier than normal volumes and volatility, particularly heading into the close. Added to that, several S&P spiders are also due to trade ex-dividend tomorrow, which means we are likely to see a pickup in dividend-related call trading this afternoon. That's going to provide another volume catalyst heading into the close. So far, the VIX is trading just a little higher at 1758 against the backdrop of those market events to close out the week. On a final note, we had big news from the NYSE today with news of the exchange's tie-up with the Intercontinental Exchange today, an announcement that has brought some great energy down here to the floor and the promise of exciting future developments. We'll continue to follow the action right where it happens here on the trading floor. In the meantime, we wish you a very Merry Christmas, and we'll be back next Thursday for the next MacDesk Floor Report.